What's up, everybody? Hey, it is Mike Widmer with the Expansion Real Estate Group. Hope you guys all have an amazing Friday. Welcome to our monthly market report for August. It is August already. Time flies every month, but it goes quick. Kids are back in school, kind of back into normal routine again. It feels kind of nice, and it's been a little bit warm for us here in Arizona. So just real quick before you jump into our stats, thank you for everybody that registered for our free cruise giveaway. Had a great turnout for that. Congratulations to Miranda Marquez. She was a grand prize winner. If you didn't win, keep an eye out for something in the mail. We're gonna send you a little gift and just a token of our appreciation. So thank you guys always for just always being great support to us. Let's jump into our stats. All right, here we are on our trusty Cromford Market Index. And you can see right over here, not much has really happened, but for the first time in almost, I guess, what is it? 1, 2, 3, 4, 5, 6, 7, in about 9 months, we actually did drop a little bit in the Cromford Market Index. We started off the month at 164 and we ended off the month at 161.2. So again, a really, really small decrease, but it was a decrease. So what does that mean? Does that mean we're going to continue to drop off the face of the earth like we did some other times? I don't think so. And there's actually been numerous times that we went down just a one time and then kind of pop back up. So it doesn't really mean that now. I actually really kind of think we're in kind of a steady holding pattern, as what you can really see on our daily chart. Our daily chart literally between 160 and 165, that small fraction for now going on almost 4 months. And now that we're not going up so quickly, you can actually see these waves. So every week it does kind of the same thing as the inventory rises throughout the weekend, and then every Wednesday is kind of our low point inventory, and so you can kind of see those waves. So that's how little the market's really changing overall over these past 3 months. It's just super steady. As of today, we're at 161 on the market index and 48.3 on our supply, and demand 77.7. So our supply actually went up a real small bit. We were at 8,949 listings last month, and today we're at 9,076. So again, 125 listings more, very, very minimal on that, but a slight increase, which is good news. Demand dropping a little bit again. I'm going to talk about this in a second, but our rates have continued to go up. We're up over 7.5 now for conventional loans, which is, pretty high. I do have some good news. I can't always be the bearer of bad news. This is good news. This is a chart of our average monthly sales price since 2011. Obviously, we've been shot way up here, but what I wanted to show you is right here. So this was the drop last year. We dropped about 13% overall last year, and since the beginning of the year, we've actually made that entire drop back. So the whole correction of last year has been now came back as far as the average price goes. But something really is interesting on this chart is, look back here. January of 2011, our average sales price was $162,360. If you take the average appreciation over time, which is about 5% per year, and I did the math on this, this house in, what are we in now, August of 23, should be worth $291,575. That is almost double. That's 288. This number here is $288,000 higher than our traditional rate of appreciation. So what does that mean? I don't know. To me, it means that we've appreciated faster than we normally have in the past. Does it mean it's going to come crashing down? Again, I don't know, but we are certainly inflated over the average price of inflation, or appreciation. Inflation too. Let me stop this real quick. Since we don't really have too much going on in the market, I wanted to just talk about a couple other points that are real estate related. This past week, the U.S. government's credit rating got dropped from a AAA to a AA. So what does that mean? That's like being an 800 credit score buyer and having your credit score drop to 600. That's going to cause a lot of difficulty for you in getting money. It's also going to cost you more money to borrow money, or a higher percentage. So as that happened, that had a negative effect on interest rates. If it costs the government more money to borrow, it's going to cost us more money to borrow. So that can definitely play out here as we'll kind of see where these rates go. But overall, that is a that's a major effect on USA, having that credit rating drop. So we'll see how that plays out, but that just happened this past week. And then secondly, just kind of an interesting thing, it's commercial real estate related. There's a real issue in commercial office retail space. It's a worldwide problem. Since COVID hit, everybody's working from home. There is a massive correction happening in commercial office. Supply is super high, demand super low. And it's so bad that there's a lot of banks now that are not even wanting to take on those loans because they don't trust the asset class. And here's this crazy number. Over the next 2 years, don't quote me on this, I'm pretty sure this is the right number, over $2 trillion of loans need to be refinanced in that space. So if there's all that money needs to be refinanced, and there's banks that don't want to do it, and if they do it, it's going to be a higher percentage rate. That could be a real problem for that space. So investors, investor at heart, what could happen if that goes down or it takes a real crash in the future? Maybe some opportunity there for you. All right, guys, I really appreciate you. If you guys have any questions, listing, selling, renting, investments, commercial, you guys give me a call, all right? Have a great month.